Hey guys, hopefully you're finding these videos in our buyers series helpful. If you like them, make sure you subscribe, share them, and of course, feel free to reach out to me if you have any questions. Okay, let's get started. So if you're thinking about buying a home and you have no idea where to start, this video will walk you through the actual process step by step. The real sequence of what happens when you buy a home in Los Angeles from the moment you start thinking about it to the moment you get the keys. And understanding this process can save you a lot of stress, money, and surprises. You know, the one thing I always tell buyers is that the home buying process feels mysterious until you understand the sequence. So once you understand the order of events, it becomes much more manageable. But in Los Angeles especially, buying a home can feel intimidating because prices are high and competition can be intense. And one mistake I see buyers make all the time is that they start looking at homes online before they actually know what they can afford. And that can be dangerous because it's very easy to fall in love with a house that's outside of your budget, and once that happens, everything else starts to feel like a compromise. So one of the smartest places to start is always getting clarity on the numbers. So let's start with step one. So step one is to get pre-approved. This is the very first thing you should do when thinking about buying a home, is to talk to a lender and get pre-approved. So this step answers one critical question: what can you actually afford? Because your budget determines everything else in the home search. So when a lender pre-approves you, they're evaluating four main areas. Income. So this is how lenders verify your ability to repay the loan. They usually ask for W-2s, tax returns, recent pay stubs, 1099 if you're self-employed. But they're not just looking at what you made last year, they're looking for consistency and stability over time. Okay, so example, like if your income jumped dramatically last year, they may want to understand why. You know, lenders want to see that the income supporting the mortgage is reliable and likely to continue. Next, they're going to look at your credit. Now, your credit score directly impacts your interest rate, and that can dramatically affect your monthly payment. So even a small difference in interest rate can change your payment by hundreds of dollars per month. You know, lenders also review your credit history, including late payments, credit card utilization, length of credit history, major derogatory marks. It's not just about qualifying. It's about qualifying with the best possible loan terms. Now, next, assets. You know, lenders want to verify your assets. This includes checking accounts, saving accounts, brokerage accounts, retirement accounts in some cases. You know, they just want to confirm that you have enough for the down payment, the closing costs, and reserves. And when I say reserves, I mean the funds remaining after the purchase. That's usually several months of future mortgage payments sitting in the bank. This helps ensure that the buyers aren't stretched too thin financially. And then finally, we have debt. You know, lenders are going to look at your debt, things like car payments, student loans, credit cards, personal loans. You know, this determines your debt to income ratio. This affects how much you qualify to borrow. Okay, let me give you a quick example. So someone might come to me and say they're hoping to buy around 1.5 million in the San Fernando Valley. But until we talk to a lender, that number is really just a guess. So, you know, after we get pre-approved, we might discover, oh, you know, they actually qualify for 1.8 million, which opens up obviously more options. Or, you know, maybe their monthly payment actually puts them closer to a 1.3 million, you know, so now we've reduced the options. You know, that difference completely changes the strategy. And the goal here is to not qualify for the biggest loan possible. The goal is to find a monthly payment that still lets you sleep comfortably at night. Once you know that number, the home search becomes much clearer. Okay guys, so step two, define what you actually want. All right, now once you know your budget, the next step is figuring out what actually matters to you in a home. You know, I mean, this sounds simple, but it's where many buyers get overwhelmed because every home purchase involves trade-offs. So let's start identifying priorities. First, location. Things like busy streets, proximity to commercial areas, walkability, traffic patterns. You know, these can all affect both your lifestyle and resale value. So for example, in areas like Valley Village or Studio City, two homes with similar square footage can sell for very different prices depending on the street. School districts, you know, even if you don't have children, school districts matter. You know, families make up a huge portion of future buyers, and homes in desirable school zones tend to attract more buyers, sell faster, and hold better in slower markets. So school boundaries can significantly impact long-term demand. Lot size can dramatically affect a home's long-term value. Larger lots may allow for expansions, pools, ADUs, which we see a lot of in the Valley, guest houses, again, we see a lot of, additional privacy in lots. In Los Angeles, land is limited, so flexibility like that can create real upside. All right, fixer versus move-in ready. I mean, some buyers want a home that is fully renovated and move-in ready. They don't want to mess with anything. They don't want the hassle. Others are more comfortable purchasing a home that needs work, but renovations require time, cash, and patience, and they require project management. So, we want to determine early which category makes the most sense for you. Another key question is, how long do you plan to own the home? If it's a 3-year home, resale matters more. If it's a 10-year home, lifestyle factors may matter more. We define these priorities early so emotion doesn't take over during the search, because emotions absolutely enter the process. I mean, you might walk into a home that looked perfect online, but once you're standing inside, something feels off. Maybe the street is busier than expected. Maybe the layout doesn't flow well. Maybe the backyard backs up to a commercial building you didn't even notice on the map. That's why you want to see homes in person. It's very important to look at the home. Photos online rarely tell the full story. Okay, on to step 3, writing a winning offer. Once we find the right property, the next step is to write an offer. And this is where strategy really comes in, because a winning offer is not always the highest offer. Sellers evaluate multiple factors. One factor, of course, is price. Price obviously matters, but it needs to align with recent comparable sales. So we look at the comps. Overpaying significantly can create problems later during appraisal. You want the appraisal to appraise right, or the loan might not go through. Contingencies. Contingencies are timelines that allow buyers to investigate the property. Common ones include inspection, loan contingency, appraisal contingencies. Shorter contingency timelines can make an offer more attractive to sellers because they reduce uncertainty. But we only shorten those timelines when we're confident. Okay, loan strength. Sellers also look at how strong the buyer's financing appears. Things that help include that are larger down payments, strong reserves, reputable lenders, solid pre-approval letters. I mean, these factors signal that the transaction is less likely to fall apart. They're more confident that you'll be able to close on your loan. All right, so now we have deposits. So the earnest money deposit shows the seller that the buyer is serious. A stronger deposit can sometimes help your offer stand out. Another important piece is seller motivation, understanding what the seller's priority is. Some sellers want a quick close, they might want a lease back, certainty over price, and sometimes the best offer is simply the one that fits the seller's need. I've seen situations where the highest offer didn't win. The seller might choose a slightly lower price if the buyer appears stronger or the closing timeline works better for them. Okay, so step 4. All right, once we've got your offer accepted, we're going to enter escrow. And the first major step is inspections. Now, this is where we evaluate the property thoroughly. Okay, so typical inspections include general home inspection, roof, sewer, foundation inspection, HVAC, pool, if applicable, and sometimes inspections uncover major issues and you do not want to be straddled with that. So for example, a damaged sewer line can cost tens of thousands of dollars to repair. But here's something that surprises many buyers. Every house has issues, even brand new homes. A typical inspection report might list 30 or 40 items. Most of those items are small maintenance issues. But the real goal is to identify the safety risks, structural concerns, termites, mold, electrical issues. We want to make sure that you feel safe and are safe. It's about understanding exactly what you're buying. Okay, step 5 is negotiating repairs or credit. So once inspections are done, we review everything carefully. Then we decide what we want to ask the seller to address. So this might include repairs, financial credits, or just price adjustment. We usually focus on meaningful items, like I mentioned earlier, like safety concerns. If there's like leaks, roof issues, plumbing problems, foundation concerns, electrical hazards, mold, termites. These are the main ticket items that we really want to focus on. We typically submit a formal repair request along with their contractor estimates, and we see what the seller says. And the goal here isn't to win, right? It's not to get the most money and to quote unquote shake down the seller, but the goal is here to absolutely protect you while keeping the transaction moving forward. All right, step 6 is title and vesting. All right, so during escrow, buyers also choose how they want to take title to the property, okay? So this is called vesting. You have many options like, sole ownership, joint tenancies, community property, holding property in a trust. This decision is important. It affects your taxes, your liability, your inheritance, your estate planning. So sometimes we'll coordinate with a CPA or an estate attorney to ensure that everything aligns with your long-term financial goals. All right, step 7, the final stage is closing. We do a final walkthrough to make sure the property is in the same condition as the offer was written. Then the buyer signed the loan document. After that, the lender funds the loan, the county records the deeds, and once recording happens, boom, you officially own the home. You get the keys and the house is yours. And of course, behind the scenes, there's a lot happening. There's a lot of coordinating with escrows and lenders, inspectors and title companies, but that's why we're here, to help keep things on track. So that's the full journey from starting the search to becoming a homeowner. All right, so I hope you enjoyed the video. And if you're thinking about buying a home in Los Angeles or the San Fernando Valley, feel free to reach out. I'm always happy to answer questions and walk you through the process, even if you're just starting to explore the idea. Buying a home can feel complicated, but once you understand the steps, the whole process becomes much more manageable. So I hope you enjoyed the video. If you did, like, subscribe, share, comment, all the good stuff. Thank you for watching, and we'll see you next time.